Dile que sí, bueno, es que sí, momento. Ustedes como ustedes.
Yo te acepto, pasa que si no tenés...
Welcome, everyone. I'm Tom Monaco, one of the directors in the Career Management Center, and we're pleased to present for you today a mid-season recruiting refresher and a Q&A session as part of our CMC Enterprise series. Today's focus is on breaking into finance, and today's session is being co-sponsored by the Career Management Center as well as by the Private Equity Program. Before I do the honors of introducing our speaker today, we're joined by a few fellow administrators who I'd like to point out, and I hope I don't miss anyone. Mark Horney from the Career Management Center, Miko Zinti, Nicholas Kalageropoulos, Sierra Jones, and forgive me for anyone whom I'm not seeing on my screen at the moment whom I may miss. Let me allow Greta Larson to say a few words from our sponsor for the Private Equity Program.
Thanks, Tom. It's great to see so many good friends here. I know a lot of you students and of course my dear colleagues at the CMC. Thank you so much for doing this event and letting us be part of it. I just had a quick announcement before I hand you over to Juan, who I'm sure you will find very, very inspiring, that we have two EMBA sections of private equity classes this summer, which are being co-taught by Professor Donna Hidrich, director of the PE program, along with Dr. Amar Rahman, who is going to be co-teaching with her. Those are not you don't need to go through the application process to take those because they are coming up pretty quickly. If you do want to participate in the program later in the year, if you're a second year, we'll have you take the exam after the class. The rest of you will be opening up those applications for the PE program sometime, probably in May, I'm guessing. So keep an eye out for that. But that's the only announcement I had. If you have any questions, of course, let me know. But let me hand it over, well, actually to Tom, who will introduce Juan. Thank you, guys.
Great. Thanks so much, Greta. Today we're talking about mid-season recruiting into finance. Let me introduce Juan Gomez Vega. He's CBS class of 09. Juan is the founder and head coach of Breaking Into Finance, which is a coaching firm that helps candidates advance careers in investment banking, private equity, asset management, and financial advisory. Juan has spent the last 20 years working in financial services in Argentina and Latin America, in the US, and in Europe, in PE, real estate, and in VC. Juan is currently an investment director head of Southern Europe for Deutsche Finance International, which is a pan-European real estate-focused private equity firm. Prior to his current role, Juan has over 15 years of real estate debt, equity investment, and asset management experience. Juan is originally from Buenos Aires, Argentina, where he went to undergrad university, as well as completed his Master's of Finance degree. As I mentioned earlier, he received his MBA from CBS in 2009, just in time to rejoin the workforce during the last financial crisis. And he's the CFA charter holder. He currently lives and works in Madrid. Juan, we're very pleased to have you with us today. Before I turn it over to you, I will ask all the participants, please keep your mics muted, and we will take questions at the end. Feel free to put the questions into the chat box, and we'll ask you to unmute yourselves, and we can have a Q&A through dialogue that way. Without any further ado, Juan, I'll turn it over to you.
Thank you very much, Tom, Greta, Mark, and everyone to be here today. As Tom said, I'm a class of 09 CBS alum, and today the main goal is to briefly go through my experience, just to share the pains and share the learnings and all that happened in the last 20 years. Which last year I decided to launch it as a coaching program. But as I said, the goal is to go through 15, 20 minutes where you should be getting some ideas. But mostly it is about making it practical, not just to discuss practical pain points or sticky points you might be facing right now in the last stretch of the networking and recruiting season. I know that for everyone, this is very personal, but it ends up being a very grueling exercise to go and sell yourself and try to get that job that might be elusive. So all in all, today it's all about sharing my learnings and answering your questions. Remember, I was on both sides of the table. I went through a number of crises, which we'll be going through now. And I've been helping people formally and informally for the last, say, 15 years. And I'm very happy, and always it's an honor and a pleasure to be helping fellow Columbia community members. So without further ado, I will share the presentation. This will be available. So very happy for Tom or Greta to share afterwards. But so basically what we are going to be touching on today is these 5 points. The first point is to go through my background. The second point is to go through what I call the State of the Union, or just do a very brief analysis of 3 important parts of the last year. I'm not going to bore you or try to go into any conclusions on what's been happening with the economy. I'm pretty sure that with all the great professors you guys have at Columbia, you will be analyzing much better than this. But the whole idea of this is understand what the employers have been going through in the last year, and what that means for especially for the unstructured recruiting efforts. Then what I call is like the grandma recipe, these 4 steps that I came up with that are in my view, work for all seasons to try and find a job. And the core of today's meeting, as I said, your questions. So before going into that, into the Q&A session, which should take the bulk of the meeting, I would throw you some ideas of things that I've been solving or discussing with our clients at Breaking Into Finance for the last year. And then a few closing remarks. I will leave you my contact details. Very happy to discuss with you offline. So as you see here, I started working in year 2000. That is as old as I am. And I started in Argentina. For those of you not that familiar with my country, we are very prone to recurring crises. And I had one of the worst crises 1 year out of college. So which meant that in 2001, I grew up with the idea that I would start working in a multinational, potentially go to New York, save money, travel around the world, because our peso was pegged to $1. So $1 was 1 peso, and sent from one day to the other, $1 turned into 4 pesos. So all my travel plans were scrapped. My saving ability in dollars was vanished. And that led me to a longer phase to get out of Argentina, out of South America, and going into New York or London. So I started working in corporate finance after a few years in research, ended up joining a big private equity fund in the country. And by 2007, I applied and got accepted to Columbia. So I moved on there. For you to have an idea, when things were starting to crack a bit, so I started I got into New York in August 2007 when the first Bear Stearns fund and some HSBC funds started to have some troubles. Even so, I managed to do what I was expected to do, which is get a very good school year internship with Oxif. I managed to get almost my dream job in the summer in Morgan Stanley. But then, as you know, Lehman Brothers happened in September 2008, and the world turned upside down for a lot of my classmates and myself and foreigners, which were having some trouble getting offers and staying in the US after business school. And when discussing this presentation, I mentioned to Tom, there's one thing that happened. Suddenly, I found myself a bit jealous of my classmates that at that point in time, when the second year was starting, my classmates had their job secure. They have $50K in their bank accounts as signing bonus. No worries in the second year about trying to get a job. And I had to do it from scratch. And the worst part is that I succeeded very much in the first year in doing it the structured way. So going in the easy way of going into campus, going through the typical recruiting, preparing for the interviews, going through the January interviews, and then getting your jobs. And then suddenly the second year was a big new world for me, which was unstructured recruiting. I always mention this, and probably this was the first thing that led me to create Breaking Into Finance, discussing with Tom and Pamela Welling at that time. Networking for me was the biggest experience or the biggest learning I took away from business school. Don't get me wrong, professors are great. The program is amazing. The real estate program is even better. But networking for a Latin American is the best thing I learned at business school. And I had to do it in a practical way. I actually had to solve the issue of not having a full-time job after business school. So as you can see, after business school, the situation accelerated my plans of going to Europe, which I thought it would be a couple of years after business school, but it ended up being just after business school. I moved first to the Netherlands, and then I established myself in London, where I worked with Deutsche Bank Reef. So I started working there when there were some green shoots after the GFC. And obviously, after a couple of years, we had the European debt crisis. Then again, this was not as dramatic as Lehman's fall, but obviously the south of Europe and what's called the peaks, so Portugal, Italy, Spain, Ireland, were suffering. There was a near collapse of the euro, but obviously I managed to go along, keep on learning. I must say that because I had to do networking big time in the second year of business school, it ended up being a habit that I included in my daily routines. And even though I had like a very nice job and I was very happy there, I continued to network as a way of progressing my career and then being more senior and generating business for the fund. And this led me in 2014 to move to Iberia. I was not expecting that. As a good Argentinian, I have Spanish origins and I speak the language. And I was recruited to come with a small fund. And I kept on working. I always say the difference between 2010 when I moved to London and 2014 when I came here was that I started with a networking list that was probably 10 people strong. When I moved to Iberia, I left with over 500 contacts at all levels in hedge fund, in private equities, in headhunters, big four firms, anyone that you could imagine, not only for the sake of recruiting, which obviously it came done naturally, but also because as you progress in finance, you're expected to be generating business, and this is how you do it, no? So all in all, it's been a great roller coaster ride that landed me in Iberia, progressed for a number of jobs, worked for the Lone Star family, and lately with the last crisis, which was the pandemic, I did two things. The first thing was to launch Breaking Into Finance. IC connected Pilar, which was one of the first supporters of Breaking Into Finance, our first client. Quite proud of her success. Obviously, it's all her merit, but she did super well in the recruiting season of this year. But I launched Breaking Into Finance. I changed jobs. I was looking for a change. I'm looking to go back into investing. And I actually joined Deutsche Finance International. So overall, this is to share. And again, it's not because I'm a role model or anything like that, but it's just because just to see that there's life at the end of crisis or even during crisis where you might have great opportunities to land jobs that come from unexpected sources. So with all this intro, just a quick look at the 1 year of the pandemic. We launched Breaking Into Finance a year ago, just when this was starting. And that was the main idea why we did that session. But I would say there's like a very simple way of looking at this is that There's the fast muscles that recover very fast, and actually they are at all-time highs, which are the public markets, especially in the US. After a big scare at the end of March, the markets have recovered a lot. As in my view, is the flip side of printing a lot of money, right? Like if you print a lot of money, there will be a lot of money chasing assets, and this is what happens. No, the slow muscles are the economy. Obviously, there was a big impact in the country or in the Iberian Peninsula where I am. Suddenly, you get 15-20% of the GDP taken out, which is tourism, and this takes time to recover, and we are still struggling through it. So the economy in general has been slower to recover than the markets. And obviously the intersection of the above, of the public markets and the economy, is what happens in real life. That is the employers that need to give you the jobs. So mostly employers went through the panic moment and analyzing whether they would survive. Then they went through the phase of, okay, I'm surviving, then what shall I do in terms of recruiting? Am I hiring people remotely or what? And then came the next phase, where it depends a lot in the geography where you want to be based after business school, but you start having like strong recoveries in the Anglo-Saxon markets, and then like slower, typical Southern European recoveries, or in Latin American recoveries that will take a few more years because that's the idiosyncrasy, you know. So all in all, my view is that there has been a great learning from GFC, which central banks and governments were very quick to react. There was a lot of, as we call it in our fund, we call it, there's a lot of morphine in the system. So they put a lot of morphine and anesthesia, and they managed to make this sick man, which is the world economy, walking with a hole in the chest, but still walking, right? Because of all the anesthesia that make it pass probably through the end of the bridge and get into the light. So all these have meant that employers have been through a lot of uncertainty at the beginning, then the uncertainty of how I make you work and assemble and collaborate with the existing teams, or am I going to be ready to put you in the office? But I think, in my view, I'm probably a bit bullish, but I think that after the summer and enter into 2022, we will have a lot of improvements in terms of work-life balance or the ability to work remotely. But we're going to be mostly in a normal world in which like going to the office is quite possible. So that means that for recruiting, so never stop networking, and now we will talk about this. But the worst part is certainly past us, and you need to be patient and do the homework, and you will get your jobs. So this. The next point I wanted to touch with you guys is the 4 steps, which I see that are good for all seasons. This is how we presented the program last year in our lounge in Colombia. So as we see it, and we put it in Breaking into Finance, it's a 4-step program. For many of you, the first one is quite known, so it's what's in finance for you. Probably most of you are quite secure, you're quite sure what you want to do. You've been spending probably your first and second year exploring specific niches inside finance or in the specific industry you want to go if it's not finance. So probably this step is not for many of you here. The second one, which is key, and I laugh because in front of me I have my wife who is a PR expert. It's about communicating. You need to craft your story. So once you know what you want to do, and you did enough research, and you have spoken with failures and successes in that industry, you need to create your story. And this is not just the CV. The CV is part of the marketing materials, but you need to create your story so that it's consistent, so that people can see through your enthusiasm. And remember, you are taking a coffee or you're having an interview that is 45 minutes. And in those 45 minutes, you need to transpire your excitement about the opportunity. You are in the investment world, or you want to be a banker. You need to show that. And this obviously shows through your CV. It shows through your emails. It shows in a phone call. And it obviously shows in an interview or in a coffee that we see in person. So marketing materials is everything, from your story to your thank you note. Like everything needs to be consistent. Number 3 is becoming a professional networker, which is, as I said, for me, the biggest learning during my MBA. I am very systematic, very structured, and I think that if you do it in a systematic way, networking delivers results. You cannot count on delivering results on a specific date, but believe me, it's a numbers game. So you do enough calls, you do enough time thinking new ideas and being productive whenever you have calls with people, and you will get your opportunities. It's, if not today, in six months' time. I always tell a story that I networked over 6 years with coffees every 6 months with one person working at Lone Star. Lone Star was never hiring, but I consistently kept on having coffees every 6 months. And after 6 months, it was at the right time, the right place. But obviously, it was not luck. It was 6 years of consistently going through my notes and say, oh, I have to have a coffee with this person. I had the coffee, and in one of those coffees, they said, hey, now it's the right time. Send me your CV. And 2 weeks afterwards, I was working at Lone Star in Spain. So you need to be a professional networker, and that doesn't mean stopping networking when you have achieved your offer, but rather continuing and making it a habit. The fourth one is, again, you are at the best business school, you have the best career management center, but it might be obvious, but don't forget about it. When the time comes to go to the interview, go and shine and kill it. You need to make it. There's no excuses for failing at the interview. Yes, you might have a bad day. That's no problem. We are all humans, but it cannot be for lack of practice. You cannot be surprised by curveballs. Like, come on, you ask your flatmate, ask your partner, ask anyone to ask you the nasty questions, so that then in the right when it is the time to do with the adrenaline, with the nervousness, with the stress, you don't fail. You just go through the rehearsal. Okay. So now we are coming to the point of your questions, which I'm very interested. I'm very eager to learn from what you're going through and how things are going close to the end of this academic year. But just to share a few questions I've been dealing with over the past year breaking into finance. The case might be that you got an offer, but it was canceled. So what shall I do now? Shall I continue to insist with this firm, or shall I try others? How much should I insist? When is it too much to continue to focus on someone? Recruiting process, I got traction, then it stopped. Is it right to contact the firm? Is it right to contact HR? Shall I contact senior people? Shall I contact my level of people? The fourth one, I already start by answering. It's not too late, okay? So if you have in mind, am I too late to get a good job in PE or real estate or other segments that don't have a structured recruiting processes? No, it's not too late. You obviously, as I said, you cannot count on networking or unstructured recruiting to produce the results by tomorrow or 2 days. But believe me, if you do it consistently, you will get your results. Another point that came out, we had this discussion with some classmates back in 2008 when things were very, very bad and gloomy. So shall I stay in school? There were some classmates of me that were considering doing PhDs or doing another program or staying in school. Or there were the brave ones that say, you know what, I will try and go straight into full-time employment, try and get 2-3 days jobs. I remember a banker that was from the class previous to mine, and she decided to offer Morgan Stanley to start working as much as possible during the second year, just because she wanted to be in the job market. She didn't want to wait until the end of the MBA. So both answers are right. So you can either just stay, if you think it's going to be better after you do another program, great. If you want to go headfirst into getting your job now, it's also great. So these are just some ideas. I do hope that in the meantime, we've been having some questions from the audience. I think that Tom now asks you to submit questions, but I encourage you, given that we have this magnificent technology, it would be great to listen to you, ask me whatever you want. Let's share your experience. I'm happy to give you the opinion on having been on both sides of the tables. I remember I've been interviewing actively for the last 10 years on the recruiter side. So I've been through all kinds of things. So no questions is too small. And believe me that you're still on time to get traction and go to get results in the structure recruiting. Right.
Brandon, thank you for submitting that question. Feel free to take yourself off mute and ask the question of Juan.
Yeah, hi Juan. Thank you so much for this. I had a question based on, and it actually based on what you had just shared. You know, when is it, in your opinion, time to like let a company go? I've gone through a few different investment banks, gone through multiple rounds, networked the shit out of them, and sorry for my language.
That's okay.
And nothing ever, you know, nothing ever goes through, even after going through multiple rounds of interviews. And it just seems like they're not saying no, but they're just dragging. And I don't know, I'm kind of don't know what to do at this point, whether to put any more energy into it or just move on.
Well, this is, I mean, there's a lot of art to it, no? And then there's a point where you need to make a decision. And it's very human nature. So you have to test case by case, no? Like whether you still have traction, whether someone is giving you some light of hope, or whether you see like every door you knock at that firm is consistent. Now, if the senior person, the admin person, the HR person are all gloomy or just they cannot tell you anything positive, then it's a good thing to stop using energy and following up. But don't, I mean, it might not be right now. So might be off for this, say for a summer internship or for just starting after the summer. But just keep them in mind, because this can change as soon as the budget is changes, they revise headcount, and then off cycle, say in October, they decide to call you, and you did all the time investment in getting to know them, then getting to know you, and you might have that gain, and maybe at that time when the headcount comes back, it's that you came after summer holidays. Suppose that you got a job that was not the one that you wanted, but then you go through all your lists and then send an email, and then might trigger them saying, "Wow, we should ask like Brandon. Brandon was like a great candidate. Let's have a catch-up coffee," and then that may end up giving results in a few months. So, but if say one after the other in the same company, they give you the idea that this is stopped, there's no point in continuing to insist. No.
Awesome, thank you.
Great, thank you. Rebecca Patel, please introduce yourself.
Hi, thank you for being here today. I was curious if you could speak to some advice for beginning this process for people who don't have previous finance experience. I'm thinking about doing something for a fall internship just so I could break into the industry, but I honestly don't really know quite where to begin.
Look, that's great. I started by saying that probably step one was not for people in this call, but obviously I am a bit biased because I came into school after 2 years of private equity. So you're in a great position. What I would say, like the first step is to speak with as many people as possible informally, and try to ask them the good things and the bad things of the different niches, so that until you find a special niche, and then you start concentrating only on that one. I mean, maybe I don't know if it's as broad as you want to do investment banking or private equity or hedge funds or any part of asset management. So if that's the case, speak with 2-3 people in each part, and they tell you the good things and the bad things. Also, fill out what are the characteristics of candidates they're looking for, because some generalists as advisors might be more prone to bring in people. You have a top education, so it doesn't matter what you did before, they will bring you in. It might be a bit more tricky with private equities that are very much specialized in an industry and they want specific. So then it might be tougher to make up for that gap. But still, if you have a year ahead of you with and training, you can train. So this is still, you can overcome it, but it might be trickier than going through a say a generalist thing. So after you do this informal thing, which also you have a great resource in your classmates, because it must be full of bankers, full of private equity people, full of asset management people. So you can speak with them over a beer and learn what was bad. Is it real that you're working 120 hours a week? All these things, so that you see the good things and the bad things. And then once you do that, there's a lot of resources in the school just to prepare, go and meet the executives in residence so that they can give you even more guideline. Go and prepare yourself for the typical interviews. But overall, like for what I was saying there, like number 3, the networking should be, then you should start going to the alumni. And one route that is good if you don't come from finance is to try and get a school year internship. That happens, I think you can spend like Fridays. I used to do that with Oxif. And it's a great thing. It's a way, obviously you are taking part of your free time, but it might be a way of showing that you are a very capable pair of hands that can learn. And actually for you, either with that firm that trusts you for doing some, say, a school year internship, can be the opportunity for the full-time job, or actually it can give you, say, ammunition for getting a full-time job at another firm, because you, for the full-time job, you already collected this very valuable experience during the fall. So I think that's do it in an orderly way, and do it, and don't put it as lightly as say, I will have a couple of beers with 2 of my very good friends from business school already. Go a bit out of your comfort zone, try to speak with many people, different clusters, maybe go to the second years, recent alumni. Just go it and do it like very, very fast, say in the first month, just before the summer. Just have mapped. By the summer, you should already know whether you want to go into hedge funds, you want to go to investment banking, and then you narrow it down. So by the time you come back, and I see if I understand it right, like you were thinking of the fall semester, after the summer, you are already, you will know this, you will start sounding like an insider. After 10 conversations with people, you start talking the same language. They recommended you to listen to this podcast, or read that book, or look at this YouTube video, and then you start sounding like an insider. And then the people will. This is the magic of networking. No, people will recommend, okay, why don't you speak with this alumni from 5 years ago, very much connected, blah blah blah, and then you will start having this experience. Now that you start sounding like an insider, which is critical to then succeeding.
Thank you.
Thank you, Juan. Next question from Pilar Romero.
Yes, well, Juan, thanks again. We always learn from you. So I have 2 questions. The first one is about networking. I may have asked you this before, but as you say, it needs to be systematic. How you keep to be genuine, even if you have like really a shallow networking plan, let's say this way. And the other question is how you think is like to break into private equity instead just in finance in general, like post MBA, if you don't want to be like before investment banking or something related, as they always say, like private equity directly or VC could be difficult if you haven't had an IB.
Yeah.
Thank you.
Yeah, look, the keeping it, I would say, human. Obviously, you don't want to sound like a robot, but it doesn't mean, I mean, you have this spreadsheet, which is obviously for you, no? So you're not going to be going with your spreadsheet to show them when is the last time you saw them, because actually they might think you're a stalker or something like that. So you cannot share that. But this is something that it's like gymnastics. Like you learn it by rehearsing it. The first few times you might be you might sound or listen to yourself and sound like very unnatural. But the more you practice it, the more it becomes second nature. And also, look, let me go a step back. If you're doing something that you're really interested into, it will not feel unnatural. And if it doesn't feel unnatural, it will just be yourself talking to different people. Some people make it easier. So some people like me that have been networking for myself for the last 20 years, whenever someone comes and is networking me, I'm very relaxed and I want to help. Some people will be awkward because they feel weird when someone is trying to network and progress or get to know more. But if you're doing something that you're passionate about or they are very interested into, you have this intellectual curiosity, it doesn't matter. It will feel natural. And it will depend a lot more on the receptor, on the person on the other side, whether they react better or worse. But it feels natural if you are very interested in what you're doing. Obviously, if you want to go into something that you just want to go there because they pay a lot of money, most probably it won't feel natural. So it will feel like artificial. Okay. On the second point, it is a bit of a clubby feeling, no? Like private equity, or like everyone feeling like they want to go into private equity and they don't allow you in, or VC. It's very hard to prove it. The thing is, the obvious place where people with no previous experience should go is to smaller places. Smaller places will be more open to experiment. Let's put it this way. They will be more open to experiment because they will value your previous experience. They will value your Columbia MBA. And they will be so fixated in, oh, if you don't have 2 years or 3 years of IBD before, you cannot do it. Or if you don't have specific private equity knowledge, you cannot do it. So all in all, I think I don't want to sound like like all things are positive and this is going to be perfect. So yeah, like if you are going to be competing with like guys that come from IBD and you're going for that Blackstone or Sequoia full-time job, you might be at a disadvantage and probably you cannot overcome it. Even when you network the hell out of it, it's going to be very tough for you to put yourself in a position to be in that place. And also because it's not only about speaking the language, then you need to have the experience and you won't have that valid real life experience. Having said that, again, go to the smaller firms, learn a lot and be curious about investment, listen to podcasts, so many podcasts about great VC people these days, or even private equity investors. Whenever possible, invest your money. That's another great way. Obviously, it's not that easy to go and buy a company, This is not something that you can do every day of your life. But look, we have done that a few years after business school. We did that with some classmates that we set up an early stage VC fund. But get interested, just ask around, just in terms of private equity. Look, there's so many possibilities of being a business angel, and in this, if you're systematic, if you take your notes, if you have your investment ideas, this is something that you can discuss in coffees with people from the private equity or the VC firms. And this is as good as having had X, Y, or Z job before business school. This is what I found. And this is one thing we discussed last year in our meeting. It's like having an investment idea, and that doesn't need to be, okay, I'm a stock pitcher and I'm amazing. I'm talking about Amazon and when you need to buy or sell. Look, it can be public or in private. And then the important thing about an investment, be it real or be it something that you're reading in the Wall Street Journal, that you're making your own numbers, it's that you actually open your brain and you show the employers how you're thinking. And it can be money at risk that you have, or it can be just you were thinking over the weekend and you came up with this idea. So I think that that's one thing that you can do and start. Like the smaller firms will certainly be more open. And as I always say, smaller firms also sometimes have smaller headcount or amount of money to spend in employees. So be ready for them not to be able to pay you as much, or sometimes be ready to offer your time to work for free as an entry trick to then get through the system and then be there. And be sure that you will be, if you're joining the right place, you will be making what you need to make in a normal period of time.
Thank you, Juan. Dimitri, please unmute.
Hi, I know you already discussed a few things about how to network, but I wanted to ask again, do you have any specific tools or techniques on how to make your networking systematic and organized? And second, also like any general additional advice you have on how to make networking effective? Thank you.
Look, I think that on the first qualitative thing is to make networking a priority. If you really count on a result out of networking, make it systematic and make it a priority on your calendar. I read recently, and I heard it before, if it doesn't go to your calendar, you don't do it. So to-do lists tend to be very diabolic creations that never end. So put in your calendar and say, I'm going to spend 2 hours a week or whatever, half an hour a day, something like that. And this is a priority. Then the place where I started every time. So as I said, when I moved to London, I had like 10 contacts. So when I start with a list, and this is start with a wish list, which is the dream jobs. So put all the funds or the banks you would like to work for, and then you start populating that list with the people that you know there. That at the beginning might be very little. It might be a few classmates of yours that were former Goldman bankers or whichever your target is, and you start populating that, and you start putting in an action column the date or what is your next action. Ideally, after doing the first leg, even when it's 5 names, you should have contacts and then suggest a coffee or a video call with people in a systematic way, in a very polite way, and a very efficient way. So don't send like a massive email to people. Just have your templates, create your templates, very neat. Please no typos. This is, that people that work in finance, we tend to be very weird. So whenever we see it, when we see a typo, we tend to look to the other side. But have your template so that you do not need to think again every time you contact someone, and then start executing. And at that point, you continue to be systematic because you take your notes. Even ask if it is okay to take notes while you are meeting the person. Research the person that you're going to be speaking with or meeting with, so that it doesn't sound as if you're interviewing them for the first time. You should, in this day and age, you should be Googling everyone or just looking at LinkedIn and knowing what they are up to or what they were up to, so that then you make it as productive as possible. Always be humble, ask for advice, don't ask directly for a job. Obviously, people that understand what you're doing, they know that eventually you are looking for a job. But then you might share it differently as, okay, look, I have these ideas. I would like to do this and that after business school. What is your advice? Or I'm doing this and that. Do you think it's right? Do you think you should contact people in other places? Or so you should make it that way so that it's productive. It goes to answer real questions. One important thing to also make it efficient is that whenever people are kind enough to give you their time, just be organized, be on time. And then very early on, try to go straight to the point. Being Latino, sometimes I wasted the first part of interviews just being kind and talking about politics or football. But then suddenly the person had to leave at half an hour. And then I lost the time to talk about the industry, recruiting, and what I wanted to do. So just try to very early on to be discussing what you're up to, investment ideas you may have, or something that sparks the other person to comment, to give you advice, to give you real advice. it's okay to ask if their firm is recruiting, if they know some other competitors are recruiting. It's okay to ask for good headhunters. So use that time that people give you efficiently, because that will result. In the best world, someone looks at you, have a discussion, and say, you know what, we are looking for someone like you. Send me your CV. That's a perfect thing. Most of the times it doesn't happen. But the second best is when they say, hey, by the way, you should speak to these 3 people or 4 people that are my classmates or people ahead of behind me in business school, and they can help you in this or that. And then another thing to be efficient, sometimes it's a bit indirect and it can be a bit sneaky, but look, at the end, if you see there's good relationship, you say, hey, do you mind looking at my CV? I'm not saying that you should send the CV to people, but hey, would you mind giving me some advice on my CV? What do you think of this or that? So that then that's an excuse for them to look fully at your CV, okay? So then send the thank you note. Never forget about the thank you note. Recently in the blog, I published something about the loving the thank you note. This is always keeping share of mind. And after the thank you note, after the meeting and after the thank you note, you go back to your networking spreadsheet. You put your notes. You put the date of the next contact. Okay, so and if you can link that to your calendar, great. I still haven't found. I'm a bit of a dinosaur. I'm not that good at technology, but there must be something where you put a calendar and a date, and it goes straight into your calendar. So say put it 3 months, 6 months, a year, but just don't forget about people, because that's how, as I said before, it might be the case that you get the results after 3 years of networking that person, right? So this is a protracted answer. I think I cover the both parts of the question, but very happy to take it offline and continue that.
Great. Thank you, Juan. Yes, that answered a few other questions that had come in the interim. Juan, I'm going to jump in with one question of my own. We work with a lot of our executive MBA students, also a lot of our alumni, young alums, some mid-level alums. What advice do you have for people who might have, say, 10, 12, 15 years of experience, let's say 10 years of experience, and they're looking to break into PE, maybe work in a different area of finance, commercial banking, maybe even internal corporate finance, and now looking to move into PE?
Look, the thing that in general, my view is that the more senior you are, i.e. the more expensive you are, the more obvious thing will be that you will be getting your next job through networking. That's one thing that happens. And obviously, if you, I mean, the recipe is quite similar in what I was telling before, Rebecca. No, like suppose that you want to change. It's very valid that after X years you want to do something else, and you have your friend that told you about this and that. You research a bit and you like that. Okay, start spending time and use your network to get to meet informally with people that do whatever you think you want to do, and start learning what is the best angle. And this goes into creating your story. Every story is defendable. Okay, so I had to deal with the fact that I was moving to Europe and I was an Argentinian that studied in the US. And people, like, the first reaction was like, whoa, what are you doing here? So just forget about the say uncomfortable moment when people say, oh, but you've been in commercial banking, why do you want to do this? It doesn't matter. So the naysayers, just ignore them. So just focus on trying to get a consistent story and understand what is practical, because what is achievable, right? Like, you cannot pretend to be the next head of US private equity at KKR if you never did private equity. So, but things are doable. So you might find the angle of, if you have a lot of operation experience, for instance, in financial institutions. So then you might be a great person to, whenever a financial institution-oriented PE fund takes over banks or takes over other kind of financial place, and you enter through portfolio companies. So, and then you go into the management of a portfolio company as an intermediate step of going into the fund. Big firms like Blackstone or any other of the big funds have then operational arms. They are still part of they might not be the investment team, but they are the operations team, which is the team that goes into the ground and then manages the asset once it is acquired. So this might be another angle. But then don't discard yourself out of PE just because you didn't do it throughout. No, in the end, when the more and more you get advanced in the career, obviously the less you depend on being a modeler or working like 24/7. So it might be the case that you have the big picture understanding of an industry, and that's enough. So you just need to go through the ideas of being an investor, do your investments on your personal account, and this is enough because of your knowledge of the industry, and then to plug yourself into the investment process of the specific fund. So all in all, there is one thing though, which it's now happening to some of my classmates that as I was discussing before, no, like they had the perfect exit out of the MBA with like going into the fund or the bank they wanted to do it, and it's been 10 or 12 years doing that. But now they find they're not that happy, or they want to change, and they don't have they didn't have the problem I had, that I had to look for a job. And now they are starting like from scratch. They're actually going through, okay, I've been doing this like not systematically because I'm more senior, I have a network, but I haven't been using it. Okay, that's the same thing. What do you want to do? Okay, I want to do this, but I've been a trader for the last 12 years. Okay, let's see what is the intersection between being a trader and whatever you want to do. Let's explore that intersection, be systematic, create your story, boom, you move. So, I mean, at this point, use experience in your favor, ignore whoever is claiming that you cannot do it.
Great, thank you. I love that advice. Ignore any claims you cannot do it. Well said. Juan, Greta raised a good question. Any advice about working with professional recruiters, executive recruiters, headhunters?
Look, I think that they are, as my English teacher used to say when I was a kid, they are a necessary evil. So they tend to manage information flows. They can sometimes give you, look, my current job I got it through a very good London-based recruiter, which is, in my view, my simplistic worldview, I think at 10% or 5% of the recruiters are worth discussing with and are always going to be consistent in good advice. It doesn't mean that always they will have offers for you, but they will give you good advice. They will understand. Headhunting well done, it's a long-term game, okay? So they should do it. They should develop you with your career, and then be ready there when you are at the point of going from X or Y or Z, and then being a CEO, being the managing director. If they're smart enough, they will pay attention to you when you're an associate, and the 30% of your first year comp is not that much, to then recruit you when you're a managing director, and then that's a lot of money for them. That was part of it was always part of my networking effort. I probably allocated 20% time to headhunters. You need to know them all. Don't neglect anyone. Always be humble and nice to all the headhunters, but don't make them a priority, right? So most of the times, the important information that they give you is data points to help you map who's recruiting, or which firms are hot or which firms are cold, right? So I say it's part of the recruiting effort. Always be nice with them. You never know when they will have a good offer that is good for you. And yeah, that's my view.
Great, thank you, Juan. Okay, so we are coming to the 30 after the hour. We've got time for one last question. Juan, what's your point of view on pockets or subsectors in the finance market that you expect to grow in the next 10 years and would be great places to be in and ones to avoid that might be shrinking?
Oh, that's a good point. I must say I'm a bit biased and just focusing a lot on real estate because that's what I've been doing for the last 15, 16 years. And obviously things are evolving. The obvious things, I think that there's an overarching thing with ESG that covers everything in finance. And you start having a lot of impact investing funds, all the funds, including ourselves, very concerned with like net zero impact and everything that has to go with like green buildings and the cities of the future. I think that ESG is a big thing that overarches every corner of finance. So don't ignore it. I think that there's a lot of noise right now. There's a lot of people that didn't know what to do with their careers, and then they call themselves Impact X or Impact Y. So I'm a bit skeptical of that, but I think there's a real thing. There's a real problem that needs to be addressed with environment, and obviously next to it, like social and governmental and governance aspects. That's in general, it's part of every pocket. It's for hedge funds, it's for private equity, for banks, it's for real estate funds. So it covers everything. I think that everything tied to startups and to the way fintech is it's upending the previous world, the world I saw when I went to business school. You need to be paying attention to that. Likewise, prop tech is very important for anything that has to do with real estate funds and real estate investing, because you cannot ignore it. It's hard. I mean, the pace of change in finance or in the world in general is remarkable, and it's to the point of being scary. I would say these are the two trends that I was a bit skeptical at the beginning, and then you start opening up to them. Things that are coming obsolete. I am surprised with the way that long-only funds they're being squeezed, and their performance has not been great. And then you start seeing more and more passive investment, index investments, all these things tied to like my classmate John Stein with Betterment. No, that it's I don't know if he's a unicorn, but he created this while at business school. Like in 2009, he was saying that he had a robo-advisor and said, like, what is that? And then suddenly he has more money under management than some funds or some Morningstar rated funds that were back in the days. No, so I'm pretty sure that now on campus, there's a lot of guys with great ideas. Just pay attention to whatever happening with your classmates, because that's where the next unicorn might be. And it's not only about unicorns, no, but in general, these things change. I mean, it's not from one day to the other, but like in 5 years, things change a lot. So we can take it offline. I'm very happy to have a quick chat on that to have a more elaborate answer. Okay, Jesse, if you allow me just 2 minutes to do some closing remarks and thank everyone for the time. Okay,
great.
So I start by probably what is the end. No, these too shall pass, guys. So this whole thing of not being able to travel or not going to offices or having this uncertainty on when you're going to be going to this city or that city, I think that's not going to last for 100 years. As this saying in Spanish we have is no hay mal que dure 100 años. So the second point I want to leave is it's not too late. Again, I'm not saying here an empty promise of you will get a job tomorrow, but it's not too late. If you're still looking for a job, do it, go for it. The result might be in a couple of months, in 3 months, or in fall, but do it. So have impeccable marketing materials tied to creating your story, network like crazy, You have the best alumni network you can imagine. Columbia is invaluable. Practice your interviewing skills. Develop an investment idea, which I mentioned before. I think it's a good thing, just to show, as I said, open your brain and show your employers how you think. Then execute relentlessly. I answered before, being efficient in your recruiting. Look, just if you have the power of compounding and you do every day, you do 15 minutes, you will have so much time invested into this that you're going to have results. And then whenever you're out there, go out and shine and make us, everyone in the Columbia network, proud of you guys. So thank you. Keep your chin up and enjoy the ride.
Juan, thank you so much for your time today. We appreciate your willingness to share your perspective and your expertise, and for giving back to the CBS Alumni Network in this way.
Thanks,
Thank you,
Juan.
guys.
Thanks, Tom. Good to see everyone.
Thank you, everyone. Thank you for your participation.